Good afternoon, everyone. Hope you're well. Welcome to the middle of the week. It's the 17th of December. Christmas, those of us celebrating, is upon us. We're just a week away. Markets are still very active. Obviously, we had that mixed jobs report yesterday. It hasn't really moved things very much. We've had a rally in stocks today. This is the Nasdaq. This is the 5-minute Nasdaq chart. When we're trading live here into the open, I use this Bollinger Band and stochastic mean reverting strategy. It triggered long here on the Nasdaq. You see the cross there. It triggered long here at 1340. It's already hit target one, which is the midline of the Bollinger Band. Quite a spike here at 55. Obviously, if you got on a live account with us, the open doesn't actually count as a high impact event, so you can trade the open. It acts like a high impact event. You'll see the movement in the price action, but also if I just add volume here, obviously the volume here is indicative. It's not completely accurate, but you get the point. Big move down here, supported by strong volume. Volume tailed off, and now we've triggered higher. So we got long here on the Nasdaq at 25,195. And we got to target one, 25,216. So a very simple 20 odd points on the Nasdaq. You do that a few times a day. Also, you have losses during the day. This business can be very simple. Let me just make is it better if my head's smaller and the chart's bigger? I can't remember how that. Let me just move it to like that. Doesn't want to do that. There we are. Chart's not any bigger, is it? Because it's got the... That's a chart smaller. Anyway, this is a 5-minute on Nasdaq. So Nasdaq, Dow, and DAX are the three markets I like to trade into the open. So we're in the money there on the Nasdaq. The Dow was much more volatile, and I've stayed away from it. There's the volume. Look, chopping up, chopping down. Remember what we do? We mark the pre-market low, which was the open this morning, down here at 47,999. So obviously, round number 48,000. And our high so far has taken us, in fact, we just pushed higher. So earlier it was 48, 250. Now we're at 48, 264. Again, this one is, that's outside touch. Messy though, messy cross. I haven't taken any trades there on the Dow. The DAX, we took an early one and got stopped out. We took an earlier one here on that cross there. Looked like the bottom was in. It wasn't. We were up. And we came down. The reason that we've moved lower is some comments by what was, I think, Chris Waller, a member of the Fed, voting member of the Fed. He was once quite highly tipped to be the next Fed chair. That hasn't happened. It's between the two Kevins now, and even, well, Chris Waller's also his name still in the round. But anyway, it's been a bit of a political game as far as the president's concerned. He was very much, or the markets betting was very much that. Kevin Hassett was getting it, his long-time associate, 10-year associate. Some words in Trump's ears over the last few days apparently have suggested that he's a bit too close, a bit too political an appointee, even though, the next Fed chair is going to be much more dovish than much more in a line with Trump than our Jay Powell is at the moment. But remember, Jay Powell was a Trump appointee as well, way back in Trump term one. But anyway, he's talking about payrolls were not very good yesterday. Jobs, U.S. market jobs is very soft. Zero jobs growth, which is what we saw negative for the last 3 months. Really, it's been negative 48,000. That. Number for payrolls. Obviously, it's all a bit messy at the moment because of the government shutdown. So really, it's the December data where things will have smoothed out, and that's where a lot of clarity will come. So the next non-farm payroll reading, as we get obviously into the beginning of the new year as well. So we've had the end of the year, New Year's in, and the first reading for 2026 will be key. Markets for next year, really, it's like 25 basis points. At least for next year at the moment is the consensus. So another 50 basis points off where we are. Probably March and June is, again, where the big Wall Street analysts are sort of coalescing around. But, if we do get, a political appointee, which is what it looks like, the downside could be more cuts to come, despite this rise we've seen in goods inflation in particular. And as Jay Powell's been saying, he's saying that the Fed are now have been saying it's like a one-off readjustment of higher prices, but is it? That's what the market isn't quite cooled about. So this stickiness in goods inflation, which had been de-inflationary for a long, long time, has come back, but we still got like de-inflation or disinflation in the services sector. So things like things you buy, like accountant prices, doctors' fees in the US, medical fees. A lot of those are coming under pressure and coming down. So services inflation moving down, and that's the most important part of the economy. Despite the rhetoric around manufacturing. So anyway, that's what we're looking forward to into 2026. We've still got a couple of weeks. Again, as I say, this is the last full trading week of the year. It's week 51, isn't it? 52 next week. Interrupted obviously by Christmas and New Year. So make the most of it, my friends. We are actually, I'm saying that I'm out of the money for December at the moment. We're having a good week this week. We lost money the first week. We lost money last week as well, points wise and money wise as well. Anyway, well, I've updated the Discord page. So if you're interested, it's all there. It's warts and all, winning trades and losing trades. Thank you, Christian. I appreciate that. So my end of day, I only post up the end of day trades that I actually share with you, obviously before the end of the day. So it's no question about when I got in or when I didn't get in. So for just to run through it all, I don't know if does that zoom up anymore? I don't think it does it? Can I zoom this anymore? Not be able to zoom. No, it's not letting me. No, I was trying to zoom the font. I can't do it. It's not letting me do that. So yeah, last week again, we're Wednesday. I normally put this on Friday or over the weekend. We actually were overall net for the week. We were down 165 points. So we had 17 closed positions last week for week 50, week 52 of the week 50 of the year, week 2 of December. 17 positions, 12 were Forex. We had 9 winners, 3 losers. We were net plus 81.55. It was the index numbers again. Obviously, the index numbers skew these actual numbers, but percentage wise, you saw I had 3 losing trades, and overall it was a 1.32% loss on. I think it was the Nikkei, the FTSE, and the Nasdaq, wasn't it? That week before last, wasn't it? Yeah, FTSE. The Dow, it was in fact. The Dow lost 257 points. The S&P lost 55 points. And the UK, the FTSE lost me 15 points. So overall, it was a 1.32% loss for this 327 point loss. So it obviously skews it to the upside. It's a bit like trading gold, and it skews it to the downside. But take it all in perspective as it's meant, really. I'm not saying I'm the best trader in the world, but I do make money at the end of each month normally. I haven't had a losing month this year. We've had a few losing weeks, and we're actually down for December at the moment, so December might actually be a losing month. But anyway, it's plenty of time to go yet. Oil trades were up 80 points. That should have been a lot more. I'd pulled the stop loss down too aggressively. We tanked, excuse the pun, down very significantly on the WTI and the Brent. Obviously, we bounced this morning with all the saber rattling and rhetoric out of Washington around Venezuela. Remember, Venezuela, some people say they have the world's largest reserves of known oil that normal extraction can get to. They still remain some of the biggest reserves. They are, last time I looked at the details of it, they're not by far, but they had some easy to get to reserves as well. So is it all about the oil? Is it all about regime change? We'll see. Obviously, politics is very much wound up in anything when we talk about oil. So oil was should have been 100 points plus this, or 200 points. But anyway, you can't do what ifs. We banked 80 pips, 80 points. So far in December, we are 666. That's a bit unfortunate, isn't it? Coming in Christmas week. down points wise, but this week we've bounced back quite significantly. Again, it's because of some these Nikkei and the uh, and the Nasdaq. Nasdaq is now fully closed trades. That's done the points wise. But anyway, we'll update the week when the week's over. But we're up from 500, so we're still down for the month, but we're up for the week so far. And I've got 4 open trades, all the ones from last week and this week so far. So we're short the DAX still. That's a full position. We're still long gold. I didn't close any of the gold position. So that's a full position all the way back from the 10th of the 12th. I raised the stop loss this morning. We'll have a look at all these later as well. 289. The Nikkei is half a position now. I pulled the stop loss down on that one as well. That's short. And the Kiwi Swissy, which has been going absolutely nowhere, got quite close to target late on the 15th, early yesterday morning, and it's rallied away again now. But again, I've pulled the stop loss down, so it's going absolutely sideways and doing nothing. I've pulled the DAX stop down, as we saw earlier. But anyway, that's what's currently open. If you're interested in it, follow us on follow us on I'm losing the power of speech here. Follow us on Discord, and my trades are here under the trade chat. Vinak, hello, good morning. Market is choppy. It's a giveaway account. Hopefully you got one. Have you got one? Is it everyone, those 17 that we did on Friday? Hopefully it's got. And the market is choppy. Oh, you're asking for one. Okay. Well, just keep following our social media posts. Keep browsing the channels. There's a new, I don't know, what's all this? Welcome to the admin profiles. I don't know what that is. There's new, follow the giveaway pages here. This was we made that 17 accounts we give away. And congratulations. There we are. That was mine. There we are. $365,000 worth of accounts we gave away last week. 17 of your names came out. So Vicky, if you're not in there, try your best of luck next time. I mean, accounts start, it's only a few dollars to get started. So if you haven't got money to get started in trading, my question to you would: should you really be trading? Because this is it's all about managing risk and managing yourself and understanding, the realities of trading and real cash when it's yours. When you get a funded account, the idea is obviously to make money at the end of the day, end of the 3 days, end of the week, end of the month, however long you want to trade it for, because then that becomes, you then get paid for being a successful trader. But you've got to have the right mindset and always keep your risk management top and forefront when you're trading. But anyway, back to what we're doing now. Let's have a look. So the DAX, I say we were long this and it stopped me out. We've chopped again, but I'm going to leave that. It's sort of ticked up because the trend is down. It's messy. It's not a clean stochastic cross. So it's moving around. I'd like to see this a bit more angle. We might see that shortly. We'll see. We've got a bit of volume here as we're only 10 past 2. There's still 15 minutes into the open, so that's a potential move. But again, you see the stochastics have flattened out. Let's go through the other ones. So Nasdaq, there we go. Nasdaq hit target. Our stop loss would have been just below. Would have been around about here when we started. That wick there, the second, third candle. I want to put it all the way down there, but around about there. We'd have got up. We'd hit target here, so I'd have pulled the stop loss up to below this candle, and then the second half of the trade would have stopped out as it's reversed, because we got to target 1, which is the midline of the Bollinger Band. Target 2 would be up here somewhere, possibly testing the pre-market high again, the top of the Bollinger Band, which is interesting as we come into the open. But we've now moved lower again in this 10-minute candle. And you see the volume is picking up as we run into the open as well. So Nasdaq T1 first target was taken, second half was closed a little bit in profit. You can see because the stop loss would have been there, so we've made a little bit on that second one. So it's a profitable first trade, and we're now waiting for the next move. I mean, again, if you the next phase of using this strategy is a continuation phase. So what you could have done now is enter the short on the completion of that candle there at 10 past 2, because you can see we've had a better cross. See how that cross is much more significant, and there's a gap between the K and the D line You can't see that very well. Let's make that a bit bigger. There's more of a downward movement there on the completion of that candle. Big engulfing candle of this leg up. And it's taken us back to where we sort of got in before. So we're moving. That would be a comfortable short there on the Nasdaq as a continuation trade of our downward trend, because it's in line with the higher time frame. That's the other thing. So when I say that, this is what I mean. So if you look at the 30-minute time frame, that's rolled over from the top here at 12 o'clock. We've been down. The hourly time frame also has been down from the 12 o'clock candle. So the hourly time frame is down. The 15-minute, we looked at the 30-minute. The 15-minute is also back into the under half of the Bollinger Band. That's moving down quite well. So the 5-minute now has realigned itself. Obviously, it's faster moving. So it tried to move up, got a half a move. We got out successfully, but that is comfortable would have been comfortable sort of for a short position. There's a continuation, but we're just going to trade the clear moves of the market. And so we've had that out of extreme move from the outside of the Bollinger Band. Now we're waiting for the next move. But if you want to take it to phase 2 of trading this strategy, you can take a continuation trade. That would have been in the direction with the higher time frame trend. So you'd have been short here from 14.10 at 25,179. A little bit out of the money at the moment. Stop loss up here where we've found resistance at the 20 period at 25,214. So that's distance there. This is the key, guys, to staying in business. If whatever strategy you're trading, whether it's automated, whether it's manual, whether it's scalping, whether it's mean reverting, whether it's trend following, and it's end of day for it, whatever it is, this is the key thing. If that's your risk, if that's your entry, and this is your stop loss here, this distance in pips, in points, in dollars terms to your account, this shouldn't be more than a 1%. Ideally, obviously, it's very difficult with small accounts, but ideally more than 1 or maximum 2% of your entire account, trading account, if this goes wrong or when this goes wrong. Change your mindset. This will go wrong a lot when you're trading. The more trades you do, the more you'll get wrong, the more you'll get right, obviously. And if you're a sort of trader that needs to have a lot of winning trades, think about that, about what sort of approach you're going to take. When I started, that was my big Achilles heel. I had to be right all the time. I wanted to be right all the time. I'm a bit of a know-it-all. I'm a bit of a told you so. I was right. It wasn't the losing money that hurt. Obviously, that hurts quite significantly. When you do it a lot, it hurts a lot. But it was being wrong. And once I realized it didn't matter, I was wrong. Your big head isn't such a big head. You are wrong a lot of the time. That was a huge relief. And my whole approach changed. It took me best part of 6 months to actually bang my head against a brick wall before that went. But that's the key thing. This bit here, the risk value, call it what you will. This is the risk. This is the risk of it going wrong. How much are you going to lose if this price that we've got in here at 10 past 2 on the 17th of December, if it goes back to this 25,230, how much am I going to lose? And the beauty of, I know TradeLocker gets quite a lot of criticism for its limitations, but one of its great assets is this box here. This, I thought I could pick that. Can I pick that out? It's not letting me pick it out. Is the ability to, set a trailing stop loss, set a fixed stop loss, set a percentage stop loss. It's really, really quite powerful for setting that up. So you can actually set, I might always want to risk, no more than 1%. So you put your risk level as 1%. This account happens to be a $100,000 account. So I could trade 312 lots if I lose 1%. If I'm buying this at this point, so that my stop loss is here. So it's beauty. It's a really, really simple way of doing that. So you can really work that out very, very simply where your position needs to be. So let's just do that for now, shall we? So that's our buy. Let's set one. We can't. Obviously, we're buying there at this point. But if that's our stop loss, so we want to. We're selling this, aren't we? So our stop loss wants to be here. So I want my stop loss there. So I want my stop loss. Draft stop loss. I can't move it. Why isn't it moving it? Oh, I'll have to change that. So I want it at 20, whatever. What's this number? 25,213. 25,213, 213, delete, 25,213. So that ridiculous amount of lots. Get rid of that. My 1% stop loss. So there's my stop loss there. I want a stop loss of 1%. Oh, dear me. 1%. My stop loss. Let's do this again. 25. What did we say it was? 213. 213. And then obviously we need to work out what our stop loss is. So there's our stop loss. My percentage is nothing because I'm only using a minor lot. So, but if we used a full lot, what would that be? Oh, it's too close now. Always messes up when you're trying to do something live, isn't it? Or you're trying to demonstrate something. There we are. So one lot at the moment. So my loss is negative. So if I want to actually make this a 1% loss, oh, sorry, I clicked the risk away. Sorry. Click the risk. Stop loss isn't there. My stop loss is 25. What would we say it was? It's probably too close now. 25,213. 215. I was just saying how easy it was. So 1% stop loss. I can. There we are. Phew! Current price. So if we got in here, that's the stop loss there. If I wanted to risk 1% of this $100,000 account, I can trade. It's telling me here 50 lots. It's a massive amount, wasn't it? Massive risk. But I'm only going to risk 1% of my entire account, which is $1,000. If this goes wrong, that's how to trade. That's how to keep things in perspective, guys. Regardless of your account size, whether this is 10,000, 100,000, 100 million, doesn't matter. It's all about risk management. It's all about managing your accounts, guys. Okay, so hope that made sense. It took a bit while, but I'm doing it live. That's why I'm trying to demonstrate it. You get the point. So anyway, that's actually going against it, isn't it? So the continuation hasn't worked, although the stochastic is still suggesting it's going to go lower. But we might run to before it moves lower. But anyway, there's no trade there. Let's have a look at the DAX. That has, there's been another touch. So that would have been like the long there that failed out. That's another touch. We haven't moved up and moved down again. So that's not functioning because we just about touched there ahead of the open. So where we are 5 minutes into the open, I'm going to leave it now. See how we go. So DAX not doing anything, but again, you see we're biased to the downside. So we should be looking to be taking short positions to the downside. But obviously anything can happen with the open. Obviously the DAX open was all the way back here at 8 o'clock. See how the volume massively picked up. But DAX will be correlated to some moves in the Dow and the NASDAQ. So let's go back to the US stocks because they're the ones that are about to move. So again, there's that move down. That's that continuation. That's the one we've just been looking at running against us. And the one I do more is actually the Dow. But the Dow has been very choppy today, and I've avoided that. But again, we've had a touch of the outside of the Bollinger Band here, but we're still moving down on the. So again, it's the continuation trade to the downside. The pre-market high was there. So I'm really just watching now. We've got sideways action there on the Dow. And NASDAQ, a bit more movement, bigger volumes there, but again, a bit more of less of a sideways action, more of a lower move down. So that was our pre-market high, but really our pre-market low in US trading, if you like, the US session when the US traders around, has been this point here. Where's my ray? Control line. So that's our when US traders are around, they're up and trading at this point. 25,150 is really the low of the of the pre-market session. But obviously we've had obviously we opened and we've rallied here today, topped here at 25,250 and then moved down to 25,150. So that's the real live range, the European and the US Open. See how the volume has ticked up significantly. And then we had that tick up in volume as Europe opened here on NASDAQ and the Dow. So they're the ones that were interesting. Let's have a quick run elsewhere as we run into open. As I say, this morning we had weaker than expected inflation. We had multi-month low for UK inflation, 3.2% from 3.6% last month. So that's a significant decline here in the UK. Stocks took off. Sterling got hammered on that. Obviously, the Bank of England meeting tomorrow, it's virtually nailed on. It'll be cutting by at least 25 basis points tomorrow from the Bank of England. Join us live for that. We've obviously got US CPI tomorrow, very, very busy day tomorrow. It's, again, with all the central banks, really what their outlook, what their statements says, that's backward looking, but obviously the statement also includes forward looking. So the outlook from Andrew Bailey and his crew tomorrow will be quite important as well for the future rate cut cycle from the Bank of England. 3.75% is expected, currently at 4%, one of the higher of the central banks in the UK. Things don't feel great here. Shops still seem quite busy, but I'm in a relatively affluent area where I am at the moment. So there's still people struggling even around here. So jobs are still hard to come by, or well-paid jobs are hard to come by. As we saw with those earnings numbers, those are in jobs are doing okay, but it doesn't feel like that at the moment. Costs going up all over the place, although energy's come down a tad. So just ahead of open, we are relatively down on the NASDAQ. We are down on the Dow and the S&P, which we don't really trade on a short-term basis, also down from pre-market highs at 6,800. We've been through our live positions. I think we have, haven't we? Yeah. Let's have a quick run through elsewhere. Billy Bitcoin continues to languish. We've had a better morning so far, but take this hourly chart. We went all the way. Oops. I thought I'd marked it on there. Let's take the volume off this. I don't like volume on here. Doesn't actually mean anything whatsoever. There we are. So yesterday we moved into 85,000. 85,000 was tested not yesterday, on Monday. The trend remains very much to the downside, waiting and seeing for a potential breakout. But you can see we're still range bound. Those numbers we talked about before are still very much in play. We had a big down day on Sunday and Monday. Bounced a little bit yesterday, but having tested 85,000, those lows are found buyers at 85,000 this time. But it's a weak candle, isn't it? It's not a great, big, fat, juicy up candle. It's still engulfed by the negativity of the previous day and the weekend and Friday. So we're much, although it's sideways action, we're very much 1, 2, 3, 4, 5, 6 days now in the under the 20-day moving average. The 20-day moving average is horizontal, which is trendless. So we want to be selling the top, buying the bottom. And we saw buys at 85 yesterday. We've been in to test 86 this morning, and we're up a tad. So nothing to get too excited about. But as you can see there, very much still down on the stochastic and setup. So crypto remains under pressure. Energy has been a big mover this morning on that. Saber wielding, rattling from El Trumpo. There's that short we should have stayed in, but pulled that stop loss down a bit too aggressively on the 12th on that Friday, and it reversed to take us out. Monday we were down yesterday, big down day yesterday, all the way into 55. So $55 for WTI has been the floor, and on Brent we went all the way down to $59. So big lurch down from $64 on Brent. Remember, Brent is the world benchmark for oil prices. So $59 was tested. Obviously a bounce today, but that's just on the noise coming out of Washington and the threats to sanction tankers around Venezuela. How much legs that has got, we shall see as the days roll over. But the trend, as you can see on the daily, has been sort of weak for a while. We've been wave of lower consolidation and another wave lower with new lows. So that low yesterday was lower than the low we got in October, which took us to $60 here for Brent. And that was lower than the cluster we'd had back in the summer at 65, and the low we'd seen here at 66.50 at the beginning of July. Obviously, the big rally up in June was sold off, and so we've been moving lower really since this breach of $70 and $65 in particular. To the downside for Brent, and 59 was tested yesterday. We bounced today, but you can see big engulfing. It's still the positivity of today has been engulfed by the negativity of the last week or so. So that's very much a politics-driven move. Metals, gold, we're still long, as I said, from the was it 10th? Yeah. I'd checked the trading system. I thought we'd taken some profit off it. 300. We haven't. The whole position is still open, and so the stop loss this morning, I've dragged it up from being down here yesterday and for the earlier part of the week. I've dragged it up to 4,289. Again, that's on the Discord group, so that's very much in the money pips wise. Got in at 422. Sorry, 227. All right. Our stop loss is 4,289, so lots of pips in the bag on gold. We're currently trading at 3,330, testing new all-time highs yet again. You can see areas. So again, another attempt of this to close the week out, and I might actually be closing that position just to bag some pips for December, given the run we've had for December. Remember, it's all about managing the account. But as you can see, there's a significant resistance 1, 2, 3, 4, 5 days through this level here where we are now. So it's reluctant to get new buyers in there. But with a big strong candle there on last Thursday, 11th, Friday, and there's Mondays, Tuesday, Wednesday to the upside. So last Thursday with the big move. So see what happens tomorrow with CPI. And Bank of England and Bank of Japan as well later this week. So gold bid 4,333, just shy of all-time highs, and we are still long. We're still in that market. Silver, again, we talked about silver, really, really outperforming. $66 has been breached this morning. We're down a bit now at 65.45, but new all-time highs again here for the silver market, outperforming. Copper's doing really well as well. So some of the key commodities very much in demand. A lot of it's to do with obviously the rush to AI and the rare earth minerals as well. All the whole commodity complex, save oil, is very much in demand. So off we go. Forex, the dollar remains under pressure. It sort of had a mixed day yesterday following the jobs numbers. We were up and then we were down and then we reversed later in the day. So there's a big reverse against the dollar initially. We did actually go to 118. Let's bring it back to, I'm sure you're all aware, this is the later on in the day after the non-farm payrolls. We moved higher. There's the volatility of the actual hour. We went to 118, then we sold off. So the dollar came back into close and it sort of held most of its gains from yesterday. It's coming back a little bit now, 117.34, but our end of day trade was stopped out. That's the raised stop loss, another 25 points yesterday on that. So dollars come back, but it's still, on an end of day basis, the dollar's still under pressure. So we're topping out here over 17. Obviously 118 was a stretch too far just on the spike of the data, but we're still holding 117. 30 range. The 117.50 range is where our key resistance is. You can see the end of day candles there, 117.53, 54. So that's the key end of day resistance. So we're topping out of this rally by the looks of things. This may be the high. See what CPI looks like tomorrow. Obviously, everybody, the non-farm payroll had been delayed for weeks. It was 11 days after when it should have been published as well, this one. So we'll still see. And the comments, from the Fed members aren't helping either. So dollar under pressure, and this bid on the euro dollar remains. The big support at the 20-day moving average sits all the way down there at 116.36. So very much bid to the upside. The yen, very much in focus, looking like we may actually get a rate hike tomorrow. We'll see. That's been the reason for the bounce today. So the dollar's up, and even up here against the yen. So although the yen remains weak, and we're back to 155.57 as I speak. I think we were long and then short this last week or so. We lost both those trades, I think, if I remember rightly. We're down. There's the trend line on the daily basis from the top there on the 20th of November. So that's a big resistance to the upside. Obviously, here we were talking about running to 160. It never happened. We've trickled down or moved down, and support is now under 155 at 154.50. You see that through there. See the resistance here, 154.50, a key technical resistance zone. Let me just highlight that a bit more for you. So it coincides with this resistance here on the way up here at the end of October, beginning of November, and then it's come back to test that now. So that's actually, let's put a box on, shall we? Where are my boxes here? So that's the zone. That's the sort of support zone. So a break below that box takes us lower, and it's acting as a buffer in the support area. So right into, you can see there the bottom of the box at 154, the top of the box 154.60. Through that, there you can even lift that up a wee bit. There we are. See back on right on 154. So 154 is the big support area. For dollar yen. So we bounced the dollar yen weaker. Will they move tomorrow? Could reverse all of this movement up. We'll see. So some questions being asked about the Bank of Japan, and again, like with the Bank of England tomorrow, very much how they frame if they get away with a rate hike politically, because obviously the new Prime Minister is very much against that, but they want to see their independence. Obviously, it's much more integrated in Japan than it is in many other of the economies, but they still want to maintain an element of independence. So 55.57 dollar has bounced up against the weakening yen again, but how long that's going to run for, we'll see. My system on an end of day basis got it wrong the last two trades, so perhaps it's due a winner. We were short and then long when we should have been short. We were long and then short when we should have been short and then long. But anyway, that's trading for you. A choppy move down. That trend line is still in place. There's the floor at 54.89, the top, and the bottom there at 54 itself. So we're in that zone, or we've been in that zone the last 2 days, and we've bounced out of it. So strong day today to the upside. Can it hold it? Still, we need to get back over that 20-day at 55.90. So, dollar up against the yen. Loonie still remains with the upper hand against the dollar, but that is fading somewhat. As you can see here, we seem to find some sort of floor for dollar CAD. 137.50 is finding support this week, having had a big move down from 141 during the rest of December. So is this floor in? If we look to the left, you can say possibly, but we have gone lower, haven't we? Here in September and the end of August, we did go lower to 137.30. So which we tested. That's what we did. That's what we did the other day, didn't we? Which we tested just yesterday. So although we're bouncing today, dollar's up a tad. The floor, we can't concede that the floor is actually positively in. Aussie 66.20. That's come down quite a bit, the Aussie, in the last week or so. But we still hold .66. We got as high as 66.85. Couldn't go any higher, and that's legged down. Down yesterday and down again today. So dollar on the front foot against the Aussie. Similar with the Kiwi, 57.80. Couldn't hold 50. As we said yesterday, couldn't hold 58 this week. We've spiked through it on an intraday basis, but 57.85 at the moment. So the rally up is sort of pausing, and the big resistance is .58 for the Kiwi. And the other big mover against the dollar this year has been the Swiss franc, 79.55. So we're still under the key .80 area for Kiwi, but again, a floor sort of forming. But is it real floor? It could be lower. But as you can see, the clusters are sort of ticking up a wee bit, aren't they? So the September low was down here at 78.50. The October low was down here at 79. We went into 79 again here in November. And so far, the December low has been at sort of 10, 15 pips higher at 79.30 zone here this week. Maybe. But, it's a bit more, you slow it, you can see it's a bit more of a rising trend line there. But really, the 80 area is still where we're pivoting through, and we're still shy of that by some 50 pips against the Swiss franc. So it's had a really good run this year, as I've been saying for most of the year. But we are now in this sort of sideways action, which is not untypical for the Swiss franc against the dollar in these terms, both in demand for different reasons. I'm say for even demand. Obviously, the tariff situation has been ameliorated somewhat from that massive 39% he first touted against them. I think it's 15% now. I think the Swiss goods are being charged going into the United States, but change at the drop of a hat, couldn't it, with this president? Dollar, better day today, but overall the trend remains to the downside. So let's just go back, see what's happened during the open, what would have triggered. Let's just have a so NASDAQ, the DAX, and the Dow are the ones we like to look at with this strategy. And if there's any, actually, I haven't checked the chatter box. Sorry, guys. Christian, good afternoon, Christian. Vinak saying trade locker is good compared to NT5. That's interesting. Not many people say that, Vinak, but there we go. Well done. I like that. I like it's the simplicity of, you're only trading one asset at a time. Trade locker is great. And as I say, the actual placing trades is really, really useful. Really, really, really useful for you. So there we go. Oh, look, we've had a big move to the downside. What a surprise. And good risk management. Absolutely. Christian, hello, my friend. Hope you're well. So where are we? Right. Well, we were long here, weren't we? I've talked this before the open. We got that target. We then got stopped out on target one. And as I said, those of you who are a bit more sophisticated using this strategy, you would have taken a short position. I didn't, but see, it's a continuation to the downside, and you would have benefited from the move down there into open and since open. We've now been open for 15 minutes, and you would have been very much in the money. The pre-market, the US pre-market low has been breached. The pre-market high has been we haven't gone that way. We've gone the other way in the first 15 minutes. But now here, you can see on the 5 minute, we're now into the overbought area here. Sorry, oversold area here. We've touched the outside of the Bollinger Band once, twice, three times. So the standard strategy is looking to go long. But look where we are now. There we are. Look, that's why we put these numbers on. So the pre-market low from last night's open all the way to midnight last night when the market opened here, you can see all the way back there, 12 o'clock yesterday. Where are we? Pre-market low here this morning. Sorry, I've gone back too far, haven't I? Sorry, let's just do this pre-market low this morning, 12 o'clock. We're much closer to that than pre-market high, whereas half an hour ago before we opened, it looked like we were moving higher. So trade what you see, not what you think. Follow the rules, and you'll be in the money. So the continuation trade has worked out, but the standard trade hasn't yet triggered. So we're looking to go long at some point, but the momentum is down. And remember, why we took the continuation trade, because the higher time frame trades, the 15-minute, the 30-minute, the hour, were all down as well. We had those 3 big hourly candles down for the Nasdaq. Dow will be very similar. They have, I'm saying very similar. It's proved me wrong. I was about to say, there's been a break between the Dow and the Nasdaq. So yesterday, Dow was off 6.2%. The Nasdaq was up 0.235%. And the S&P was down 0.24 of 1%. So there's been this split between the industrials and the technology. We've had all this fuss around Oracle in particular in the tech area. Obviously, the takeover of Warner Brothers, Paramount in the mix, Disney in the mix, Netflix in the mix. All very, very messy there. So that's impacted the S&P and the Dow as well. So much dirtier move here on the Dow, but the bias was to the upside here on the open, and then we've sold off since. So we've got a pre-market high was there, so we pushed. So the actual high of the days in the trading session, we saw what the Nasdaq was doing. Nasdaq's going with this news around Oracle and pulling it down. So the high of the day now. This is not that's the pre-market high, but that's the high of the day. So so that's the high. Sorry, just getting rid of the. That's the pre-market high, and the high, the actual trading session so far today, is being put in on the open here. So that's always a suggestion that perhaps that done for the day. I was obviously 15 minutes into the day, and there's not a great deal of news today, but plenty going on. So that's not tradable. Really, we got chopped around. That should be short. It's now saying long continuation, so stay away from it. It doesn't make sense. Don't risk your money. But again, equally, don't overthink it. So the Nasdaq's worked out quite nicely. The DAX, what was the DAX doing? The DAX was short, and then it's triggered long there, but it already hit there. That's gone up, and now it's come back down again. So this is looking to go short, but again, it's messy. I don't like it. It's in a tight range. We're at the low end of. Did I not put in the? Was that no different strategy? I thought I'd put in the day. Did I not put in? Oh, I can't have done. I thought I'd put in the day high and low on this, but perhaps not, because it's the DAX and it's not. It's the Dow and the Nasdaq, isn't it? It's more important. But we've got a range here. I don't like it. It's a bit messy. That one would have worked out, but you might have got stop loss too tight to come against today. It's hit there. That's now looking to go short. It's hit the outside. We're looking for a cross. Wait for that cross to go short, but doesn't look like it wants to go much shorter than that, does it? Doesn't want to go under 24,000, 24,036, 24,000 is just off the. Again, I thought I put the line on this. So it lost my lines. At 24,000, I'm sure I did that earlier before we came on air. Listen to me. Before we went live, 24. Delete. 1, 2, 3. There's that 24,000 zone. So it's messy. Looked like it was moving out. It's now consolidating there on the DAX. So again, sorry, it's a 5 minutes, so it's gone long. That's runged over. It should be moving down, but it's moved down to that target one area already, which is the Bollinger Band. Then it's bounced off it, so it's messy. Nothing clear. Leave it alone. Stay out. Remember, we were short this one from last night, so we're in the money on this one. We want it to be short. I pulled the stop loss down earlier. There's my entry from last night, 24,125. So we're in the money on this one anyway, but it doesn't look like it wants to get to that 24,000 this afternoon, does it? But anyway, it's moving down. The Nasdaq was working out quite nicely. We were looking to go long, weren't we? It's hasn't quite crossed yet. Wait for the action to confirm. Where have we been? Well, there we go. We've tested the low. So that would have, my friends, that would have generated buys. The pre-market low, the low from the open when and we went to. Did we actually get? Yeah. So we went under 25,000. So 25,000. Let me just put that in as a line as well. As obviously generated its own buying momentum. So buyers at 25,000. Again, the nature of the algorithms, the algos, 25,000 generating buying on the open on the Nasdaq 100 today. So I'd be happy to buy that now. I mean, it's 60 points. I mean, many would, if they've got in down here, I'd be more than happy to get that. But the spread might have been a bit meaty. But as you can see, my system wouldn't have triggered because the stocks have touched or got quite close, but they haven't crossed. We've moved down quite aggressively, and this might be the sum of the retrace where we are now, the 50 points from the 25,000 low. But interestingly, we tested the low and then back. So I've been a bit on them. If I've been watching that a bit more, we're going to try to dip in there. So it's touched, still hasn't crossed. It's the nature of lagging indicators. You just got to, go with the flow. But remember, we are still, we're not in this position, in this market, we're out of this market, but the higher time frames remains relatively weak. So we'll see if there is a retrace. And we're 20 minutes into the cash session here. So the Nasdaq looks the most active and the most possible for new trades. Just come back to the Dow. Dow is a bit messy, but it's following through. It's in line with the cross on there on the stochastic. We're moving. We've got more volatility. We've got the widening of the Bollinger Bands. We've got this big wicks to the upside, rejection. But now we're moving higher. So this is looking quite positive. We're now got to the high, the pre-market high. The opening high, and we've pushed even higher in the last few minutes. So this keeps going higher. So the pre-market high was here. The opening high was higher than the pre-market high. Now we've pushed a new high for the day. So this is all biased to the upside currently. But again, this would have been a continuation trade. In fact, it wouldn't be because it's turned and it's bounced off. So it's rejected that turn, hasn't it? It's not what that's telling me, because the stochastics are still moving higher. Okay. So there we go. Let me just bring in the calendar for you. I can't do that one because it's Tuesdays. Tomorrow is busy. We got a speech from Trump tonight later on. He's it's all about economics, so he'll be blowing his trumpet tonight. Let me just find the let's bring this one. So where are we? It's gone. What happened to it? So this was obviously it's because it's my mouse control. Sorry, bear with me a second. So tomorrow's the big day. There's Trump's speech. Tomorrow is the Bank of England Bailey's speech. 12 o'clock we'll be live with you for that. We've also got the ECB tomorrow at the same time, and then we've got CPI. So a massive day tomorrow. Unemployment claims as well. Expect to come down a bit from last week's spike up, but still very strong. And then overnight, Thursday night into Friday morning, we've got the Bank of Japan. So very, very key 36 hours to come on the markets. So stay tuned. And we wrap up with retail sales from Canada and the UK this week. So a key final full trading week of the year. And we'll see, I say Bank of England expected to cut rates, Euro, maybe chatter about raising rates next year, but certainly nothing happening tomorrow. And the Bank of Japan, consensus is now for a 25 basis point hike from the central bank in Japan. So lots of nuances in the statements in what the central governors are saying. So Governor Bailey, Governor Udia, and Miss Lagarde, all very much in focus over the next 36 hours. So keep your eyes peeled, my friends. Meanwhile, back as far as the Fed watch is concerned, we now have a 78, 22%, so 78% chance of no change in January, 22% chance of a potential 25 basis point hike. So that's changed a little bit from yesterday. It's come down from, it's gone up to 78 from 75.5. And obviously, consequently, the chance of a cut has gone down from 24.4 to 22% as far as the options and the futures market is concerned. As I said at the beginning, the consensus from Wall Street is a cut in March and June is what's planned, with a bias to many more not many more cuts, but potentially more cuts into the second half of 2026. But obviously, a lot to happen before then. We've got midterm elections in November, second year of the Trump administration. So instead of that. Vinex saying instead of forex, I don't use my forex book calendar. Well, it's just habit, I think. Vignette, it's something I've always done. From when I very, very first started 30 odd years ago, I've always used Forex Factory, and I like Forex Factory. It's clarity. It's the default calendar. I'm not a big fan of investing.com's calendar. I'm not a big fan of Forex Factory's calendar, FX Street's calendar. It's just habit, and I'm an old guy, and changing habit is the case. It is a nice my FX book. I should share that more, actually, FX book. But yeah, sorry about that. The reason I'm using Forex calendar is that our new calendar isn't actually. It's still not showing me what it should be showing me. So my log in here, you can see my. I need to speak to the bosses about this, but our trading calendar is only showing me. I don't know whether it's my setup, but it's only showing me the previous and the forecast. It doesn't actually show me the actual event. So if we look at today, it does all the. You can fiddle with the impact level, so I just use the high impact levels. So. Durable goods due today. Didn't know durable goods was due today. So again, a question about whether. I don't think that is true. Durable goods was yesterday, not today. Sorry, retail sales was yesterday, not this morning. CPI out of the EU was today. Durable goods isn't today, I'm pretty sure, and jobless is tomorrow as well, not Thursday. So there's a lot of wrong thing. There we go. So jobless claims there. CPI is still there. Yeah, has it got the Bank of England inflation rate from it hasn't got the Bank of. Anyway, it's probably the way I've got this set up. So that's why I'm still using Forex Factory. It's still my default calendar, but thank you for your comment. You're absolutely right. I probably should use a different calendar, but anyway, Dow continuing to move higher. So the stochastic was in play, and that's the touch of the outside there. You see, it didn't cross till that, but that's the vagrancies of trying to trade the open. Technically that would have worked out because you would have bought there, but the massive volatility right on just after open there. So you would have been in the money on that with that strategy there, because it would have waited for the cross there. It would have got filled because it's happened there on that candle, but it probably wouldn't. That cross wouldn't have happened there, or that move away of it hasn't actually crossed, has it? It has crossed. Wouldn't have been confirmed till the close of that candle. So you'd have gone long there at 1440, and that one's now in the money. The Nasdaq may have turned around as well. There we are. That's the cross. So we would have bought here. Remember what we were talking about there? You can see that not much clearer. That is crossed. That's what we were waiting for. So we'd have got in there. So we would have gone long. If I'd been on the chart, we could have done that live, couldn't we? I wasn't here, so I'm not going to claim that. So we would have gone long there. Let's make it green for go. So there we are. We've gone long here at 23,035. Our target is back up here to that previous low of the pre-market session. Remember that we marked on at 25,150, and it's really the Bollinger Band. If we're going to retrace that far, I'd be a bit skeptical about how much this is going to move higher. But anyway, we are long. The system's long. We're in the money at the moment. 35 pips from 25,035 to 25,070. So let's just. I was going to wrap up because it's 3 o'clock, but let's just see how that plays out. I have a suspicion it's going to go back against us because it's a weak. Actually, no, that's actually moved quite well, but we're still in the oversold area here in stochastic, so we may have some legs, but certainly that's the first big up candle we've had in 25 minutes of the open. Look at that. See, we opened here at 30. We moved down 1, 2, 3, 4, 5, 6 candles. We've had a bounce, which is understandable because we went to 25,000. It's technically it's tweaked this, so we've gone long, and I might have closed that out. I might be closing that out actually, watching that on a shorter time frame because that still looks set. But it's 5 minutes. Patience is key. Let's see how the next 5 or 10 minutes play out. So we'll come back to that. Nasdaq DAX was moving higher, wasn't it? And there we are. We've moved up. We're out, and that's looking to perhaps go short again now. And so that let's just wait for that because that might confirm if the blue moves lower. We might have to wait a bit. So that's looking to go short. As a mean reverter, so we might take that for you. Put our stop loss up at the top of the turn, put it up there. See what happens. And that was it Nasdaq? I can't remember which ones we were talking about. So that's Nasdaq has triggered long, but we're giving it all the back. The Dow has turned as well, but we haven't crossed. And the DAX is here. Okay. Again, guys, talk about different platforms. That's one of the, obviously if we had like MT4 or the C Trader, we could have had all three charts up at once. It's a bit more difficult here with Trade Locker, but anyway, there we go. Any more questions? Anybody want to have a look at anything else to trade? Anything else? Vinay, Christian, anybody? Before I wrap this up, because I need to go and get this tea's cold. I need to go and get some proper lunch. But let's see if we can put that short on the DAX if it confirms, when that candle closes in 3 minutes still. See if we get that cross on our stochastics. It's looking like it's not brilliant, is it? So we're looking like we're going short this. So I'm going to be shorting it when it completes. Perhaps I should do 2 minutes. What about it's a bit quicker? Vinay, thank you very much, my friend. 5 minutes might be a bit too long, somebody's saying here. So if we do it on a 2 minute basis, it's just more chopping about, that's all. But that's looking to go short. Obviously, it could do that and then bounce off again, might not do anything, but that's looking like a sell. So should we let's just do that. So I want my stop loss above the turn, so 24,103, let's call it 24,103. We'll just do a simple 0.1 of a lot. So that's what we're doing. That's where our stop loss is, and we're selling at current market price because it has. Sell, confirm, because I've got 2 click on still. So we sold there. Didn't quite cross, but I was just doing it for demonstration purposes as the candle was closing because we're doing it live. So I might all revert and we may move back up here. The price may move up. So equally, we might get stopped out with a tight stop loss like that. But there we go. A little bit. It's moving in our favour at the moment, but that candle still hasn't finished. Actually, we should have waited till the candle was completed. So that DAX is played out. I was playing out. Nasdaq is also, obviously didn't take that one, but that was our entry on this this candle here on the cross, and it's moved up. So it moved up initially. Now it's going back against us. Our stop loss would have been down just below this pre-market low. And there we are. So it's trying to move lower again. So that one might not work out. DAX on the other hand is in the money a little bit. Where's our target? Well, it should be round about there. I'm not going to 24.59. Actually, let's put that in. and I'm going to leave you because I need to go and so we edit this. I want to take profit at the midline of the Bollinger Band, 24.59 or 24.60. 60. Go off and see what happens there. So we've got our stop, our initial target. That's it's going to be the whole amount because I need to go and walk the dogs before we go off this afternoon. So there we are. There's a stop loss. There's stop my target. That's where we got in. Target's a bit further than stop loss. So just see how that goes out with this strategy. The kind of move down. The orange is starting to move over as well. Nasdaq would have. It has. No, it's retracing that. So that's in the money as well. Although we didn't see him saying that. So, right. There's no more question, Vinay. Thank you very much, my friend, for commenting. Take care. We'll see you tomorrow. Bank of England, ECB, US inflation, big day tomorrow, and the weekly claims. So watch us tomorrow from quarter to midday, 11:45. We'll be live. I might come back on later for the CPI as well. But busy day tomorrow. Last big day today of the year. So it's a bit of an echo there, isn't there? What's going on there? So take care, everyone. Be safe and be good. And I'll see you tomorrow. All the best. Hope that was useful. Let's go back to our live demo short, which is sort of in the money a little bit. 10 cents on a 0.1 lot pot size. So there we go. Stay focused, my friends. We'll see you all again tomorrow.